You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike TOSAW from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the Flowmaster Schwartz from SCHW. The Option Block is brought to you by SCHW. When it comes to trading volatility, trust SCHW, the creator of the VIX Index, for in-depth and relevant information. SCHW's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again to commence our broadcast week here on the old Options Insider Radio Network. Coming at you in the teeth of the storm here. Risk of contagion abounding everywhere. But you know what? We come at you nonetheless. Neither rain nor sleet nor slow, easy for me to say, or snow or risk of contagion can keep us from our appointed broadcast rounds. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. A lot of excitement lurking on the network these days, so make sure if you missed something, go back and check it all out on the full network feed. If you're just listening to the old OB, first off, we love you, but you're missing out on a hell of a lot of content. Vol views, great vol views last week with Vance Harwood from Six Figure Investing, as well as our friends over there from NASDAQ and all and sundry out there talking about all this contagion risk with the banks and everything else. What does it really mean? Is it a canary in the coal mine? In fact, that's our question of the week this week as well. So make sure you're playing along at Options on your platform of choice. It should be there right now. It should be there as you listen into this podcast as well. So if it's not pinned, it'll be right up near the top so you can find it. We retweet it throughout the week as well so you can keep playing. And of course, if you want even more content in your lives, maybe you have questions about all this crazy stuff going on. In fact, I know you do because you've been hitting us up all weekend long with questions about this kind of stuff. So if you have those kind of questions, excuse me, then of course, keep them coming here at Options on social media. Questions at theoptionsinsider.com also works. Of course, if you want to join our pro Q&A sessions, get your question answering and asking taken to the next level, as well as options oddities, as well as great giveaways, as well as exclusive access to some early great pro content that's going before it hits the network, as well as, of course, live access to this, everything else we do. Theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us on the show today. Going to mix things up. No trivia game this week because the meatball got called away at the last minute. He can't make it, so it doesn't seem silly to have a contest when it's just Uncle Mike, really, because we know the Rock Lobster when he joins us. Not exactly 80s wrestling, not exactly his thing. But I will say this, because he has the temerity to miss the show today, we will award the uncleest of Mikes, a.k.a. Mr. Mike TOSAW from St. Charles Wealth Management, a full point in his absence. Uncle Mike, how do you feel about that? Big stakes here on the game. You miss a day, you lose a point, sir.
It is. It's inspiring me to not want to lose a point, but this is something to where, the more I think about it, I don't know if I want to accept it because, professional wrestling, it's a sport of the utmost honor. And I almost want to win this very honorably, just like any self-respecting professional wrestler would.
But you'll take the point. I know you will.
Nah, you know what? I'll give the point to Andrew.
What? Andrew's going to have 1 point?
I feel honored, and then I'm off the schneid now. Look at that. I got a point.
All right. So then you also welcome on the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, making a rare Monday appearance here on the old OB. Mr. Rock Lobster, look at that. Uncle Mike always accusing me of skullduggery, always accusing me of shenanigans. Somehow I conspire every year to get him to lose the 80s wrestling game. So here I am gifting him a point, and he refuses it and instead gives it to you. So first off, let the record show there was no skullduggery. If anything, there was skullduggery in his favor, and he chose not to accept it. So I don't want to hear any complaints going forward. And then B, how do you feel about being on the board in our wrestling trivia game now?
Well, I do accept the generosity because I know that likely that would be the only way I could ever get on the board. So there'll be like TOSAW with a zillion points, Sebastian with a zillion points, and me with 1 point. So I feel like I'm getting somewhere on the board.
You'll always be,
helps a little bit.
You'll always be third place in the contest. So it's third place out of 3, but still, you'll always have a third place trophy in your heart somewhere that you can always look back on your accomplishments. Third place in the 2023 80s Wrestling Trivia Challenge as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the hell is trading out there. And spoiler alert, there's a lot. There's just a lot. It's kind of crazy town out there. Of course, if you listen to our show on Friday, listeners, Vol Views, we were kind of on the cusp of all these fears about contagion, what's going to happen. And we were selling off pretty hard then. And as you mentioned on the show then, sell-offs 2 days in a row, that usually spooks the market. Heading into a weekend, that always spooks the market. But then that third leg down on a Monday after we've had the whole weekend to digest things, and you hope coming in on Monday, maybe you come in with a clearer, calmer, saner head, and instead you sell off even harder on that Monday. That's the scenario where we've seen in the past where vol really pops and people really tend to get skittish and the market can really kick into another gear, another leg downward. So there was a lot of concern coming into today that would we see that? Would we see that third leg of the sell-off, which really kicks us into another level lower out there? And the answer for today was no, but yes, but no, kind of weird. Obviously, we're not selling off right now. In fact, the markets are still up. They managed to kick it into another little gear this morning. Of course, news over the weekend about the regulators stepping in, saying everyone's going to be made whole out there in the Silicon Valley crisis, saying no taxpayer money is going to go to it, that FDIC fees can cover the whole thing, magical FDIC out there. So that reassured a lot of people. Yellen and others stepping in saying, you know what, this isn't 2008 all over again. This is not as systemic as it seems. That seemed to allay fears early on, and we saw a nice pop out of the gate. In fact, overnight, the futures, of course, were up as well. So that kind of allayed some fears. Then we saw a little bit of the old spookage sneaking in. We did manage to get the S&P all the way up to pretty much 3,900 again. So rallying it pretty decently on the open. And then right back, and now we're coming back down off it a little bit again, right back down to like 38.60. So we rallied it about 90-odd points. So a pretty impressive rally early on out there. And yet there still were concerns. We saw names like First Republic getting halted this morning, Wells Fargo coming under heat. Even good old Chucky Schwab having a bit of a rough day out there today. So established names are in the financial space are really coming under it. Schwab off 10.5% right now. We were talking about it, of course, on Options Oddities. If you're on the pro side, listeners, you heard about the tsunami of paper we saw going up in good old Chucky Schwab on Friday. So if you're on the pro side, go check that one out on the feed if you missed it. If not, what are you waiting for? TheOptionInsider.com/pro. A ton of paper and more going up today out there. Chucky Schwab trading 52 2/3 off 6 handles today. So obviously, in spite of the regulators trying to get out and get ahead of this thing, in spite of Biden coming out saying, hey, business as usual, not scary, not going to be another meltdown, no risk of contagion. Despite all of that, we are seeing still a lot of lingering concerns out there with some of these names. Not exactly surprising, That's why we put this question to you this week. Our question of the week right now, listeners. Everyone's got contagion risk on the brain after the meltdowns, of course. So we not even mentioning the old, Silvergate Capital with the whole cryptos just a few weeks ago. That was kind of really what seemed to start to get this ball rolling out there in the financials. So we put this to you out there with this, now we have, of course, Silicon Valley Bank. And then on top of it, we have, First Republic today, all this pressure on Chucky Schwab and everything else. So we're asking right now, all this canary in a coal mine of worse systemic problems ahead, or is it just a tempest in a teapot? That just went live a few minutes ago. Poke's already diving into it hot and heavy at options. So we'll reveal the results of that a little bit later on. Of course, that'll be our question of the week, so we'll be coming back to that throughout the week. Right now, as we're kind of sitting here, VIX is still up strong from our last show. VIX had about a 27 when we kicked off the show. That puts it up a little over 7 handles. When's the last time we said that, listeners? VIX doing 7 of anything. VIX, let alone up. VIX up 7 handles at about a 27 when we kicked off the show. That puts it up 7.4 or so on the day. Hit a 30 handle today, listeners. Yes, we were back in that range this morning when things were just kicking off earlier this morning. Got up to about a 30.81 on the cash. So threatening a 31. Man, we got to go back a ways to see a 30 handle in VIX as well. You got to go back to October of last year during that one of those later waves of sell-offs we saw in the year last year to really see VIX over a 30. We got up to then about 33.5. And then, of course, the sell-off in June, we hit about a 34. But outside of those, and then of course, that same period, right around that June period. So we flirted with 30. We touched it a couple of times last year. But really, it's been a while. It's been since October that we've even considered moving in that direction. So, again, vol creeping up. VVIX, not creeping, exploding. Up 33 points from our last show. 108. Remember I said, low vol, probably not going to hang out there for too long. The Rock Lobster took my advice. We'll get to him in a little bit. He's having a good week up there in Maine. VXX, 56. Man, VXX, of course, they had a reverse split last week, listeners, 4-1. So not quite as big of a move as it sounds, but still. Insane number to say out loud. VXX 56. UVXY 660, up 2.1 points from our last show. So apparently it can move above 5.5. 660 right now. SVIX 13 3/4, down 4.5 points. I was playing around in SVIX this morning before the show and some of the options just to check them out again. I haven't been out there in a little bit. And all this talk about SVIX again made me think I should go take a look at them again. And those options change. They still suck. If you're wondering, are the markets better out there? No, the answer is no. I don't know why that surprises me. I talk about the numbers every week on vol views. I should know. There hasn't been a lot of paper out there, but still, I was hoping for something a little bit more, a little bit tighter market since the last time I kind of lurked out there. And the answer is no. You still want 60, 70 cent wide at the money option markets. Go ahead, have fun. UVIX 26.20, up a little over 10, about 10.3 points. And VolQ 27.5. Up 3.7 points from where it was this time last week. So we got VIX and VolQ now hanging out within spitting distance of each other. They're like kissing cousins out there. So that's, again, we're kind of in some rarefied air when those two are kind of hanging out at the same level. Let's go around the horn. Since he doesn't join us on Mondays very often, let's give him pride of place. Mr. Rock Lobster, you weren't on vol views on Friday. And obviously a lot going on out there in this whole will they, won't they, is it not contagion environment we find ourselves in. VIX kissing a 30 handle today. Man, when's the last time that happened? October, obviously. We just found out. But a lot to unpack. What's catching your eye out there today, sir?
There's almost too much. My head was in a whir this morning. So I guess, the one good thing about the Fed and the FDIC and Yellen is you can always depend on them for having a total and complete about face. So whatever they say, just give them a couple of days and they'll totally change their mind. So basically saying that, depositors, like large depositors, aren't going to get any money back. Now, as like back in the old days, I thought that's how kind of banking worked, like you put money in a bank. And another thing that I think the problem is people keep thinking somehow that the Fed is controlling bank risk. And I just, I don't see how that is. I think there's some like weird implied put going on that the Fed is watching, like, these MBS balance sheets or something like that. Anyway, so the short answer is it appears that, the Fed will provide money at favorable terms if banks pledge mortgage-backed securities as collateral and just get cash to pay depositors. Now, the thing is, so that basically the depositors will be whole, but the equity shareholders of the banks will be wiped out if it comes to that, right? So, and I think all the Silicon Valley guys, I think they all freaked out at the same time, wanted all their money out. The bank ran out of cash. So this is, again, like modern finance to me is still, there's some moral hazard problems, which I think they might want to spend a little time working out, because people keep thinking they're always going to get their money back when they kind of blow it. And then, of course, the irony of ironies is a guy at a very high level, and SVB, I think, worked for Lehman Brothers as well. So
he learned nothing the last time around, is what you're telling me.
What's weird is, what I don't understand still, and this is my problem, is why are you taking depositors' money and then, and they can buy mark-to-market securities, right? Because you could have bad marks, you could have whatever, and then, we're like rates are going up, and then temporarily, like as right now, all those mortgage-backed securities, like it's not like they're going to be worth zero, right? Or they're going to be worth 80 or 75 cents on the dollar. Like as of right now, people I think still expect to be paid. So like held to maturity, they're going to pay. Like I get that. The problem in the meantime is they're marked. They are relatively illiquid securities, marked to the price of interest rates. Like, so I'm still like, again, as a trader, my head is shaking over like, how does this work? So
the Fed waved their magic mark to market no more stick. That's what they did.
Yes, I think, and I have confusion. And it just reminds me, like back in the days of Thomas the Train, and who is that guy, Sir Topham Hatt? Thomas, you are causing confusion and delay. And I swear that's, I still seem like that seems what like Fed policy is and FDIC policy here. It's like it's kind of dopey in my opinion. If you're going to have risk securities, and then you're going to have some sort of, so they insure $250,000, but not the rest. So where does anybody put their money to try to make payroll? It's like it's the same problem we had in 2008, where all these companies, trying to squeeze every last penny out. They couldn't roll CDs, or they couldn't roll commercial paper, right? All that kind of stuff, like basic banking function. And the reality is, like 99% of these mortgage-backed securities are going to pay in full. But the problem is they're being marked like they're going out of business. So, like I still don't understand the logic of that whatsoever. I mean, I could see that you would mark down securities that have no chance of being paid back as a percentage of the portfolio. But again, I don't get this sort of upper math accounting. It all is just, it just sounds so stupid at this point. So, and I can see, the Fed helped kind of create this problem. So like they create problems and then they have to go fix them just, a year or two later or 6 years later. And it seems like once again, they're doing it. They created problems, providing too much liquidity to the system, not pulling liquidity out, So again, it's almost like they should just stop doing their job and just stop. And I think things will be better. and just let the dollar float. And because I don't see any way, shape, or form that they're getting better at their job after 80 years. It's just all they do is keep fixing their own problems. So that's where we find ourselves. And mostly we have another Fed meeting. How are they going to raise rates while they're providing liquidity, raising on one hand and providing liquidity on the other? So I think a big part of the market and why vol exploded was, wow, maybe the Fed's going to take a 6-month pause raising rates until they figure out what's going on after they've been raising rates up 500 basis points in the last year and see, survey the damage. Because, I think we all heard this line of they're going to raise till something breaks. Well, I think banks going broke is something breaking, right? Like this is a sign that they're starting to hit some kind of ceiling on their policy. Now they have to see what's going on. And I think that's where, so we could have quite a thing where like gold or bonds or something like that. I mean, they definitely picked up a bid, but they could also pick up another leg if the Fed is out of their interest rate rising business in the short term, at least for the next, let's say, 2 or 3 months. So all of a sudden, what looked like kind of a lock for a rate raise on the 22nd is, I would say there's a little more uncertainty around that. And that's why VIX is 27, and clearly VIX is not broken. All the people almost said it's like zero DTE is taken over and VIX is broken. Nope, just the market had to move. And then VIX came alive once again. So, and at this rate, I figure we're going to stay at this higher level of VIX while we wait for the CPI number and then, whatever the Fed is going to say again on Wednesday. And that is the lovely market we have. But in the meantime, money is coming for Apple like they're like the most expensive, biggest market cap stock is now viewed as a flight to safety. And somehow Charles Schwab, which I've never known Charles Schwab to own any like mortgage-backed securities unless something has changed in the last 5 years, why they're selling Schwab and buying Apple. But again, I got to look more into it because maybe Schwab has changed their investment policy, but I was pretty sure that wasn't the business they were in. So maybe TOSAW has some more light to shed on that.
All right. You ask for him, you get him. Mr. Uncle Mike, sir, what is lighting up your tape in a started off Uncle Mikey kind of day? Now we're kind of hovering. What are your thoughts, sir?
A lot of thoughts for today. So last night, right around 5-6 o'clock when the S&P futures opened, we rally. I believe we were up 60, 70 points approximately last night. Seemed to be a relief rally in that, they're going to back their depositors. Okay, great. And then markets sold off, rallied. So this would have been, if you're on the right side of the trades the last 17 hours or so, you've had a wonderful day trading, to say the least, with all the movement we've had in this marketplace. In terms of bonds have rallied as a flight to safety. Whether it is just theorizing that the Fed is going to pause, or whether it's just that much fear in the market that somebody wants to be in something safer, that remains to be seen, but we'll see. We're having a rally right now in the shiny stuff. Silver's back, SLV's back above 20 again. And so this is really, we have a lot of moving parts in this market right now. Now let's talk about Silicon Valley Bank, in that they're backing everybody that has money in there, depositors, but they're not backing the investors. And that's fine. That's what they choose to do. It surprises me that they are backing the people that have money in there, to be honest. And I shouldn't say I'm surprised with it, just because of the fact that the more I think about it, let me rephrase that. It does not surprise me that they are backing the people there for a couple of reasons. Reason number one, no president wants to have something like this hurting everything, because then he'll ultimately get blamed for it. But the second reason is that, I have a very long track record on this show of never being political, but I will say this. I'm not convinced that this was like a Texas bank that was full of oil company venture capital money. I don't know if we would have gotten this bailout. So the policies of the people that have money invested in that bank are similar to the policies of the Biden administration, from my understanding of it. And so from there, I can't say I'm extremely surprised with this bank being bailed out. With that in mind, the thing that does need to be concerned of is if you look at like a KRE, for example, is this going to be a contagion in some way, shape, or form, like what we're talking about? If we look at KRE, which is a regional bank ETF, just looking at this last week, it's above 60. Now it's at 40. I'm sorry, it's at 45 now, so it's up. And we have a significant sell-off in that ETF. Now, if you believe that this is something that's overdone, then this is the buying opportunity of the century for you. If not, then we'll see if there's another shoe to drop. I don't have any clients in KRE, so I really can't comment on it. I don't really have an opinion of it one way or another based on this. So it's the big question right now is there going to be other banks, when you turn on the light, are you going to find more cockroaches, if you will? And that's what we're looking at this stage. How is this going to affect interest rates? I'm going to be watching with bated breath next time Powell speaks. Does he have the intestinal fortitude to raise rates at a point when we're getting a market doing what it's doing? Now, so far today, we're slightly up on the day in the S&P, and so very slightly, 6 points as I'm looking at the ticker now. So it appears that we're somewhat stable, at least for the next 10 seconds. That's about as long as I'll give the stability of this market at this stage. With VIX going up nearly 10% on the day, a lot of fear going on. And so I know that with some of our trading, or the trades that I'm doing, I was able to, the hedge that I had on my put spread, I was able to pay off pretty well. So I was able to get a pretty cheap roll down on a put spread, which I'm very happy about. And so I just think that we just have so much uncertainty at this stage that this is just a great point to really affirm the fact that you desperately need some type of risk management in your portfolio, or can you survive a stress test of some sort? And that's what you need to be aware of in markets like this. And that's about all I got.
Let's see what the market's got in store for us today. Spoiler alert, a lot of paper hitting the tape out there today, listeners. Let's see if we could parse it all for you, make some sense out of it. First off, VIX. Yeah, it's putting up some numbers today. We are just crossed, as Uncle Mike was finishing up his talk there, just crossed the 1 million mark, 1.03 million contracts here on the tape. So a little bit past noon, already at the 1 million mark. So yeah, going to be another robust day out there in VIX land. Go figure. People like a day when VIX is moving. People like a day in a period when VIX is up. People have been piling into VIX upside for how long we've been talking about that trade now, listeners, on vol views. Well over a year. Size, crazy upside. They've needed a little bit of this movement to, I think, rekindle their love affair with all things VIX. Remind them why they got into the vol space to begin with. So a little bit of this upside, kind of good for what ails you out there. Certainly good from a VIX volume perspective. Again, haven't seen a 1 million contract. It's been a while, and of course, in the last week or change, we've seen just a surplus of them. Before that, you got to go back a ways to find a day that was 1 million. But then the last week or so, all of a sudden, we've been hitting that 1 million mark with alarming regularity out there. The ADV reflecting that, listeners, 728,000 contracts on the tape right now. So, again, we were at right around 500,000 not too long ago. Pretty much if you go back to when Powell's last big move, not when Powell's been talking recently, but the last big Fed decision, that's when we were at right around 500,000 contracts and now up to 728,000. So that's a big move in the span of close to a month. SPY, 7.8 million contracts out there already. So already putting up a day's worth of numbers out there. The ADV 9.2 is going to hit that any minute now. The S closing in on 2 million contracts, 1.96 million contracts out there. Let's see. Let's play our favorite game, listeners. It's a crazy day. Maybe it's not all 0 day after all. I have a feeling that it is. Days like today are when you kind of want that. You know what? I knew it was going to might be something weird today, and there is. One contract in the top 20 is not expiring today. It's actually expiring, dare I say it, at the end of the week. That's crazy town. That's insanity. That's an eternity in the equities. So of the top 20, one contract is not expiring today. There are 18,012 right now of the 4,000 calls going up today that expire at the end of the week. So there you go. I had a feeling today was going to be one of those weird days where you never know. And you go beyond that, you go to the top 20. I see 1, 2, 3, 4 more. So 5 total out of the top 40 are not expiring today. We have 2 people playing in June as well. We have 11,000 of the June 3,900 puts and 9,000 of the June 3,500 puts. So a little bit of longer term June downside also lighting it up out there today. But it is still mostly 0 day, but got a little bit of action floating around out there. By the way, we saw obviously a lot of paper going up on Friday in some of these banks. It was all effectively 0 day. And these contracts were going out in the weeklies, a lot of them. And they're putting up in Bank of America, putting up 1 million contracts on the same day where a lot of those are going out. So all this hand-wringing about can the industry handle 0 day if we went to it? Can OCC possibly process all of that paper? You know, they did it last Friday. They tend to do it on a weekly basis now. So it's not like this is unheard of. It's just, I think, the notion of adding all the rest of the week into that madness, maybe a little bit too much for them right now, a little bit too daunting of a prospect. But it can be done. Push comes to shove. No one said, you know, Eurodollars and SPX could all go electronic, and then pandemic comes along and they say, hold my beer, we got to go figure this out. So things can happen when push comes to shove. So maybe the industry just needs a little bit of a shove to get the 0 day single name action that all of you so clearly, desperately crave. Small caps, IWM on fire today. 970,000 contracts on the table. Let's just look really quickly and see where IWM is hanging out right now. They're off nearly 2%, 1.75%. One of the kind of less heralded aspects of this recent market volatility is that small caps have just been getting, I think the technical term is annihilated. They're down 8.25% just in the past 5 days alone. I mean, you extend that down over 10% in the last month. They were flirting with the 200 level out there in IWM. Obviously, almost 2,000 in the Russell 2000. Now 173 out there, or 1730. So a lot of downside in small caps. Not exactly surprising. If this is a canary in the coal mine, small caps are going to feel it hardest and fastest. So makes some sense out there. Obviously, folks voting with their dollars out there. And small caps, that the worst is not behind us, at least not yet. The ADV 861, so already past it out there in small caps. Already a day's worth of paper. And the Qs, day that ends in Y, they're putting up some numbers today. The Qs, 2.5 million already. The ADV, a little bit shy of 2.91. So spoiler alert, it's going to hit that. Let's go out to the single names and see what's lighting it up out there. Now, sometime, listeners, these names, and these days, I should say, where it's all crazy macro, sometimes the micro gets left in the dust. Not so much today. It's not an explosive day. Don't get me wrong. We're not pushing 350,000 contracts to break into the top 10. Nothing like that, but it's a respectable day. 236,000 contracts is what it costs to break you into the top 10 today. That gets you to Marathon Digital Holdings, ticker symbol MARA. I haven't talked about this on this show in a little bit, and then recently it popped up on the Odd Block, or I should say the Options Oddities show. So all of a sudden starting to make it back into our headlines again, which is interesting because pre-BITO, this was all the rage. Everyone had to have this. This was the way to get crypto exposure in your securities account. These days, you have more direct ways to do it. But nonetheless, Marathon popping hard today, up 1.11 points, or nearly 21%, 640. You know, a lot of these names have been beaten up in the Silvergate before all this other stuff even happened. Silvergate started to show the cracks in the dam there, the chinks in the armor, if you will. And now they're saying Marathon has access to all the funds. So that's what's driving this pop out there today. Apparently, there was questions about whether they could get all their funds out of at Signature Bank as well. And apparently, the answer is yes to that. So Marathon popping out there today. Good for 236,000 contracts on the tape out there today. Then number 9, back out to Contagion Land, at least fear of Contagion Land. We've got Citi popping into our top 10 First time we've had Citi in there. I can't remember. Probably a Citi earnings from a few years ago, maybe. But it's been a while since we've been talking about Citi in our top 10 most active listeners. Yes, that's where we find ourselves today. Once again, everyone wondering, canary in the coal mine, tempest in the teapot. Folks voting with their dollars in Citi as well. It's off about 7.5% right now, trading 44 3/4. It's about 360 is how much it's selling off right now. So that's a pretty decent drubbing. It's also not that far away from its 52-week low of $40. Still got a little ways to go out there. The range on the year, maybe not as wide as you'd expect in Citi. The high 58 1/4, the low is $40. So doesn't have that far to go to also get back to its 52-week high, but obviously much closer to its 52-week low. So can it threaten that 40 handle and bounce off of it? I suppose we shall find out. When did it hit that? It hit that back in, I was going to guess, October, and that is the case. October is when it hit it, October 11th. And then it had rallied, had regained a lot of that. It got up to 52 1/3. And then, of course, we know what happened since then. So Citi, number 9 out there today. Number 8, not to be pushed out of the top 10 again today. AMD says, forget all this contagion talk. Let's talk some chips to the tune of 311,000 contracts today. AMD hanging out right around $83, up 30 cents today. So people obviously have other things than just financial contagion on the brain today. They have some chips. They're bidding it up. They hit it early, got down to 78.5 this morning, and now trading right around $83. So they have popped AMD pretty nicely after coming for it earlier in the session. Number 7, kind of Mara-related name. We got Coinbase out here. So this also gives us the financial contagion concerns as well as all things crypto. Coinbase trading 59 1/4 right now, up 5 3/4, or nearly 11% out there today. So serious pop out here for Coinbase. Been quite the saga over the last week. It hit as high as about $65. That was on Wednesday of last week. Then, of course, they came for it. Got as low as about 52, it seems like 52 1/3. That was on Friday and the nadir of all this. And then they have popped it quite a bit out here. So Coinbase looking a little bit better right now, 345,000 contracts. What isn't looking good, we were just talking about it earlier, listeners. Good old Chucky Schwab, number 6 on our list today, 355,000 contracts. Again, check out Options Oddities. We broke down just a ton of call paper going up out there on Friday. Today, trading 52 2/3, off about $6. Looks like it has bounced pretty firmly off the low. The low they hit today, man, they came for it early. Got down to 46 1/3. And then they tried to rally. It got up to $50 at 10 o'clock. Then it sold off again, down to about 46.70 at 10:30. Then they rallied it again up to about 54 1/4 by 11:30. So, man, in a couple of hours, this thing did a lot of living. Then it's been gently, I use gently in air quotes because it sold off again to 51 3/4, not just a few minutes ago. Now it's back up to 52.61. So a lot of back and forth in this one. The Rock Lobster just talking about his thoughts on this. Is it merited or not? What are your thoughts? Maybe that'd be another good question of the week. We already have one live, but this again kind of goes back to that canary in the coal mine. This Schwab is a living reflection right now of that debate being played out live with real dollars out there in the market. And at least so far, it's still off 10.4%. So at least so far, it seems like the answer the market is saying is, this is perhaps a bit of a canary in a coal mine. Perhaps there is worse to come out there. Even a name like Schwab, a lot of people thought relatively stayed. Apparently not the case, at least from all the sellers out there today. Number 6, we've got number 5, we've got good old NVIDIA. By the way, Schwab doing 355,000 contracts out there. Number 4, number 5, rough week this week. I got to run out right after the shows here today. Hop on a plane, so got to get a lot of living in on the shows today. Number 5, NVIDIA, 494,000 contracts, listeners. 230.5, so again, kind of feeling a little bit of that AMD love. In fact, the chart looks very similar. They came for this one early, crushed it down to below 223, 222.97, and then they rallied it all the way up to almost 233. So they rallied it almost 10 handles, got up to 232 and change. So, wow, just a lot of living out here in NVIDIA as well. Number 4, let's go to the Amazonians, listeners. 527,000 contracts on the tape. $93 is where it's trading right now, up 2 1/4. So Amazon whistling past the graveyard after they took it down to 88.12 this morning. So they have popped this one nicely. Number 3, we were just talking about this. The Rock Lobster found it amusing that folks were crushing Chucky Schwab and bidding up Apple. It's up 3 1/4 right now, 2.2%, I should say, trading 151 3/4 after a start of the day, 147. 147.80 is where it opened today. So did a lot of living out there in Apple. You know, I've said it before, market doesn't like when Apple is red. They are doing their darndest to make sure that is not the case today. 712,000 contracts on the tape. Number 2, I was just talking about this as well. You know, this is the name that maybe shows us perhaps we can handle a lot of single name 0-day paper going up. Bank of America off $1.30 today, or 4.36%, trading right around $29. It's only had a little bit less than a $2 range, about $1.90 range today. So maybe not quite the wild vacillations we've seen in Chucky Schwab and some others out there, but still a lot of action, a lot of paper, obviously, as well. But nothing can dethrone the king today. Even talk of contagion. Tesla, number 1, 1.53 million contracts, off about a nickel, trading 173 right now. Got his low this morning as 163.91. So pretty much a 10-handle rally on this thing. Got up to 173.83. So they did rally at pretty much exactly 10 handles before they started relaxing it a little bit right now. But intriguing stuff out there. Speaking of intriguing, if you are still intrigued by some stuff, there are some earnings still popping off. We got Stone Cold, our old friend, popping off tomorrow. Leonard Holmes, and guess Wednesday, we've got Oatly. You may have heard of this name, Oatly. Talk about it once or twice on Options Oddities. The Rock Lobster and I, we're in for Oatly right now. That's all I'm going to say. Adobe on Wednesday, Five Below on Wednesday as well. Thursday, Dollar General, Blue Apron, and FedEx. So some names still popping off out there. Let's go out to the upcoming earnings real quick. Actually, we're coming up against it. A lot going on out there today, no surprise. The season right now hanging out at 103%. So you can check all that out for yourselves. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as I begin my journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody. Let us begin our journey to the dark side here in the old Odd Block. And we're going to kick it off with a name. I think the only thing you can really say about this name today in terms of it coming on our radar and being flagged by our Eye of Sauron is holy crap. That is the technical term, listeners. Holy crap. Man, there's a lot of paper going up out here today. And perhaps in a name that you may not expect, you know, all this talk of canary in a coal mine and contagion. You know, you expect a lot of your regional banks and others to potentially be caught up in all this. But it obviously has ripple effects to other financial related names, including in this case, a credit card and processing and payment solutions name, not one we've ever talked about here on the show before. This is Marqeta, ticker symbol MQ, trading $4.18 right now, off 22 cents right now. It's had only looks like about a 30-cent range on the day, so it hasn't been as crazy out there. Let's see, on the year ago, it was trading $8.50, and then it rallied all the way up to $12 in March of last year before they kind of came for it the rest of the year, and obviously down to the low right now, 52-week low. It's at right now, it's $4.16, so it's 2 cents north of its 52-week low. But it wasn't necessarily underlying movement that caught our eye out here today, listeners. It was just, as I mentioned, technical term is holy crap. Holy crap, a lot of puts are trading in this name. In particular, we saw, first off, 10,000 of the June 3.5 puts going up for 15 cents. They were 15 cents at 20, so they went up on the bid. So it looks like, well, maybe are they drawing a line in the sand? It seems like a lot. The stock trading 4.18 right now. And we saw another 10,000 going up also for 15 cents, and 10,000 more for 15 cents, and then 3,500 more for 20 cents, and so on and so forth. 6,614 more for 15 cents. So total of, get this, listeners, 90,000 90,000 of these puts have traded on the day. Now, when that happens, I want to kind of start digging into what happened, what was the first print to maybe give us a little bit more insight into what was really going up with these things. I'm trying to dig in now to see, are they drawing a line in the sand? Were they selling these, or did they actually maybe park a bid here and try to buy these? And it looks like the earliest prints were around 15 cents, right around 9.33 or so. We saw, and then actually 9.33, that first print was for 20 cents. They were 20 cents at 30. The vol was 67.5, listeners. And they traded 20 cents, 2,200 times before they started seeing more prints go. Actually, no, there's a print before that, 9.32. Of 20 cents as well, 2,512 times. That was a 66 vol as well. And then we saw 15 cents trading about 8 minutes later, 61 vol. So it does seem like they were selling these bad boys here. At least that's my takeaway as well. I would normally talk to the Rock Lobster now, but he has to hop in and fill in for the Meatball, who is on assignment out there today. So instead, I will make a rare toss in the land of the odd block to our friend, the Uncleist of Mikes, Mr. Uncle Mike, sir. While you're prepping for your block of strategery here, what are your thoughts on 90,000 puts trading for 15 to 20 cents in a pretty much $4 payment name that most people have never heard of? Oh, you think they think they're selling these bad boys? You think they're feeling the contagion risk and they're buying it, sir? What do you think's up out here?
I mean, I can see where you're coming from. I just have a hard time believing that anyone would want to, I guess, just sell all that juice on a day like today. But there's an old saying, and I've said on this show many times, there was a put seller, and he made money every year, except for the 1 year when the market went way down. But who could have possibly predicted that? And as the put seller was saying that, the put buyer said, the put buyer. And so if you're comfortable taking on that risk, God bless you. We have a VIX that's at one point today was above 30, but I got to be honest, I don't know if I would have the comfort level to sell puts on a day like today, just as an opening transaction.
Not getting a heck of a lot of juice for that, let alone 90,000 times. But yeah, I get the whiff that someone is looking to draw a line in the sand here. But again, I need to dig in maybe a little more to see exactly how this trade started going up. Because if they were buying them, they managed to maintain that bid for a while throughout the day and take all the ones they could off the table. So if someone had told me 90,000 puts went up in a fintech-related payments name, I would have guessed off the top of my head probably people buying them today. But the paper doesn't seem to be that way. But again, these things can get subtle and nuanced, even with 90,000 contracts. I will dig in more into this. We'll have more insight into this maybe a little bit later on. But intriguing stuff. Marqeta coming onto our radar in a big way. Since we're coming up against it, we're going to pass up some of this Schwab call paper. It's like someone trading 10,000 of the 72 halves out there in June in Schwab today for 205. So kind of mid-market towards the bid a little bit. So maybe a bit of an overwrite. But those calls are trading fast and furious out there today. Instead, let's go out to another name that's kind of a weird one. Not one you'd expect to be lighting it up on a day like today, but one that also came up on our oddities scans on Friday as well. This is Goodyear Tire and Rubber, ticker symbol GT, trading 1034, off about 55 cents or about 5% today. On the year, 1280 a year ago. They got up to their high in August of 1569. And then they came for it in October. It hit its low of 966. So it's not quite at its 52-week low, but it's not that far away from it. It's trading 1034 right now. So folks have been coming for Goodyear Tire and Rubber, and they've been coming for it again recently. It was 1181 just a week ago, and now it's 1034. So not a name you'd expect to get caught up in contagion fears, but nonetheless, they have been coming for it. We talked about some puts in Goodyear Tire on Friday, and now again, we got more puts lighting it up out here in Goodyear. This time, the October 7 puts, listeners, 10,000 of them going up for 30 cents. They were crossed on the open here. The stock was 1050, so a little bit higher when these went up. And it looks like they were 20 at 35. They put them up for 30 cents. So they got them off for a pretty decent level. 1,000 more went up afterward. A couple thousand more went up afterwards, also for 30 cents. So they were offered at 30 cents pretty much the entire time. And even though the stock, let's see, where was the stock in the second chunk? The stock was still about the same level. So looks like someone was gobbling up these puts to the tune of 30 cents. And they got a total of 12,000 of them that they gobbled up. So Mr. Uncle Mike, seems like perhaps we got more spreading of the woe fears, this time in Goodyear Tire and Rubber, to the tune of someone paying 30 cents for the Ox 7s quite a few times as well, sir. What do you think? Did you think I'd be talking about Goodyear Tire today, sir?
Well, you didn't, but I figured I'd roll with it.
Oh, there we go.
Not catching that one.
There we go. But I wasn't in pun mode. I was getting ready for the next segment. But yes, an excellent pun, sir.
No, I mean, it's another one to where I think it's just a lot of fear in that you're buying puts 30% out of the money, and there's someone there to where everything will be fine so long as this doesn't happen. So long as Goodyear stays above 7, I'm in good shape. You know what? Let's buy some 7 puts just in case it doesn't. That's what it feels like to me.
You know what it feels like to me, listeners? It's strategy block time. So let's get to it.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, we've been gassing on, but now it's time for you to gas on, sir. What is lighting up your tape out there today, and what do you want to let our folks know about in the block of strategery today?
Yeah, in the block of strategery, whenever you think that something can't happen, it usually can, and in fact, it always can. So I just want to reemphasize the purpose of having a plan in place in case something, some type of craziness happens. Like, let's say the 16th largest bank in the country has problems. So you never know if something's going to happen. And so I've talked about this on the show before, my beloved garbage put spread hedge, in that going into a weekend, if I have a put spread on, oftentimes what I'll do is I will buy a Monday put spread with similar strikes, either the same strikes or maybe a little bit more narrow because I don't want to pay as much. And so this weekend was no exception. Some weekends I don't. Most weekends I do. And so with that, I actually did get in on Thursday just because I was concerned about the jobs report. And what it did is when a put spread gets a little bit too close for comfort, I like to roll it down. And it is kind of something to where it's not always pleasant to roll it down. You have to acknowledge a little bit of a loss. Or if you're an old school stockbroker, you say, oh, we didn't lose on it. We just had to roll it down. Well, you lost on initially. But with that, I'm still in it. And I rolled the put spread down. And what that garbage put spread that I bought that expired today gave me was enough of a profit to where rolling it down was very inexpensive by comparison to what it would have been had I not had that garbage put spread in place. And that's just one way with which I like to manage risk. Weekends scare the bejeebers out of me. I like sleeping at night on the weekends. During the week, I can stay up all night and be scared all night about short premium. But during the weekend, I do like to rest. And the other thing that does is that there's nothing you can do if you are exposed over a weekend. And so I enjoy it for that reason as well. If I'm not levered at all, meaning I'm just looking to get into a stock and I sold a put, I don't buy protection in that case because I'm not levered and I'm fine owning the stock anyway. I'm not referring to that. I'm just referring to if you are levered, having a plan is something that you need to have, and having protection is something that a lot of times I believe you need to have. And having a plan of what to do with the protection should you need it is most important of all. And that's the strategery block for today.
As we keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. I mentioned our question of the week at the top of the show, just went live earlier and right before the start of the show, really. And we asked everyone has contagion risk on the brain this week after the meltdowns of SIVB and FRC and everything else out there. So we thought we'd put the question to you. Is this the canary in the coal mine of worse systemic problems ahead or just a tempest in the teapot? Uncle Mike, which way are you voting? Which way do you think our audience is voting? I know you pulled an Andrew, sir. Are you there?
Oh, I'm sorry. I did mute him. I apologize. I believe it's a tempest in the teapot, I think were your words.
Those are my words.
I will go with that because I don't think that I don't think we're there yet. And so banks are even if we have a few more bank failures, we still don't have a lot of them. And so I think we're okay for now, but I might change my mind on that if we get more of them coming out in the near future. And I think the audience agrees with me.
Yeah, they're saying almost 2/3 right now, 62.5% saying this is the tempest in the teapot. It will blow over. 37.5% saying this is a canary in the coal mine. There is worse yet to come. Just went live, listeners. So that's obviously just the early voting. Really quickly along these lines, Uncle Mike, we're getting a lot of questions about this stuff, just like this question from Gar. So let's squeeze him in now before we got to get out of here for this week. He says, with all the insanity reminiscent of 2008, what's an investor to do? And he puts in parentheses, taxable IRA, etc., with account balances greater than $500,000. He puts in parentheses again, cash plus securities. Is one bank more secure than another? Should I divide up the account into multiple brokers or banks? Thanks. So yeah, Uncle Mike, a lot of people are concerned about this. They're trying to start playing bank arbitrage and trying to keep themselves under that $250,000 limit of FDIC insurance. I'm sure you had some clients inquire about this recently. What do you have to say here for Gar and everybody else who has these questions?
Well, if it's money that you have for a bank, understand that FDIC insurance is real. If you're concerned with it, you can have go to multiple banks. If you have so many banks to where that's a problem, then you're likely putting money into a brokerage account. If you have money within a brokerage account, understand you do not have FDIC insurance. You have something called SIPC, which it's not insurance. It's not backed by the federal government. It's essentially backed by a bunch of brokers that get together and they take care of their own. So let's say that XYZ broker went down, all the other brokers would come in and take care of them. And I believe the last time that had to be done, if I'm not mistaken, don't quote me on this, was 37 years ago, if I'm not mistaken. So you're relatively safe where you are. And if you're concerned on the bank side of it, get multiple banks. If you're concerned on the brokerage side of it, you're insured up to $500,000. But of that $500,000, $100,000 can be in cash. The rest of the money has to be in securities. And once again, it's not insured by the federal government. It's backed by I don't even know what you want to call them. The band of brokers, we'll call it.
Band of brokers. I like that. Unfortunately, listeners, that music means we're up against it. So if you have questions like Gar, as Uncle Mike pointed out, they are a little bit different thing, not quite FDIC. There is some backing, though, there. So, and you may, if you are worried, if you have balances over that, I know a lot of our listeners do, it may be worth your while. If it's going to help you sleep at night, maybe you spread that out. Remember, it's not per depositor. It's per depositor per bank. So you can have multiple accounts at that 250 level at multiple banks, and you will be protected at all those different banks out there. Unfortunately, that music means we got to run through a plug to the Rock Lobster and his ilk out there, even though they had to leave midstream out there. I get it. Things going on out there. So check them out over there in the land of the pit. And Uncle Mike, if folks have questions in these tumultuous financial times, and hey, who doesn't? And they want to reach out to you, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW, TOSAW, or check out my website, stcharleswealth.com.
stcharleswealth.com is the place to go. We got to get on out of here. Like I mentioned, I have a plane coming up. I got to catch listeners, but don't worry. I'm not going to leave you hanging here for the crypto rundown. So we're going to do a Just the Facts, ma'am, crypto rundown edition in a little bit. So if you're listening live out there, hang out in the live. We'll be back in a few minutes earlier than our normal time to get you some crypto action before I get out. Got to get on out of here, easy for me to say, and get on down to the big Futures Industry Association conference. Got a feeling all this talk of contagion is going to be dominating the tape out there. Get the pulse of the industry. I haven't been back down to this conference in 4 years. since pre-pandemic. So get the pulse of all this, see what's going on for you folks. Maybe find some good guests and people to bring on the network for you folks to learn from in the future. That's why I do it for you folks at the end of the day. So Crypto Rundown coming up. Then I'll be traveling for a bit, but don't worry, you'll get your dose of on-demand content coming at you throughout the week. Then back again live from Florida on Thursday, another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by SCHW. When it comes to trading volatility, trust SCHW, the creator of the VIX Index, for in-depth and relevant information. SCHW's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.